Lambo 404 because of Bitcoin. You hear that phrase. It started as a meme, really, but it feels like a real question for some people now watching Bitcoin's, well, incredible journey.
It absolutely grabs your attention. And, it really taps into a core part of Bitcoin's appeal, doesn't it? Its potential as a way to build wealth.
Exactly. So today you're diving in with us because you're looking past the headlines, maybe the hype. You want like a deeper understanding of Bitcoin,
Hmm.
why it's lasted, what actually gives it value, the nuts and bolts of how it all works.
And that's exactly what we're aiming for. We've pulled together some key resources to help unpack it all.
Mhm.
We're using info from CoinMarketCap that gives us a good baseline.
Okay.
We're also looking at bitcoin.org, the community project, for their perspective. And then there's a really comprehensive overview from Wikipedia.
Right, for the history, the design, the economics, all that stuff.
Exactly. So we get a pretty detailed picture.
So our goal today, it's pretty simple. Pull out the most important bits about Bitcoin from these sources. Explain why it's stuck around, why it's become such a big deal.
Yeah, break down how it works and why it's valued the way it is, but without getting lost in the weeds, technically speaking.
Okay, let's get into it then. What is Bitcoin fundamentally?
Well, at its heart, Bitcoin is the first and still the biggest decentralized peer-to-peer payment network.
Peer-to-peer, so person-to-person directly.
Precisely. Think of it like sending money straight to someone else without needing a bank or, a payment processor in the middle.
Okay. And this whole idea, cryptocurrency, where did that term come from?
That's interesting. The term itself was actually coined way back in '98 by someone named Wei Day.
98. Wow.
Yeah, but it was really Satoshi Nakamoto, this mysterious figure who brought it to life with Bitcoin in 2009.
And Satoshi just disappeared.
Pretty much vanished around 2010. And still, nobody knows for sure who they are or were. It adds a layer of, well, intrigue.
Definitely. But it's not like Satoshi or any one group controls Bitcoin now, right?
Absolutely not. That's a key point. Bitcoin, the network, capital B, is decentralized. No single person, not Satoshi, not the miners, no company controls it.
So who does?
It belongs to everyone who uses it collectively. For anything to happen, like verifying transactions, users have to reach a consensus. And that consensus is achieved through mining.
Mining. We hear that term a lot. That's the computer solving complex problems part.
That's the one. Specialized computers crunching complex math problems. They validate transactions, add them to the public ledger, and get rewarded with new Bitcoin lowercase b, the currency for their work.
Got it. So miners keep the network running and secure, but for a regular user, how do you actually use it?
From the user side, it's much simpler. You'd use an app on your phone or a program on your computer. That's your digital wallet, and that's what you use to send and receive the coins.
Okay. And Bitcoin.org, they called the network an innovative payment network and a new kind of money. Still peer-to-peer, no central boss.
That sums it up well. And because it's designed as open source, anyone can look at the code. Nobody owns or controls it. Everyone can participate.
Which allows for new things.
Yeah, things older systems maybe couldn't do easily, like really fast peer-to-peer payments across borders, often with lower fees than traditional methods.
Okay, let's talk about these Bitcoin accounts. People think account, they think bank logging. Sounds like it's different here.
It is different, yeah. That's a common mix-up. There's no central Bitcoin bank you sign up with. No username and password in that sense.
So if I don't have an account, how do I hold my Bitcoin? Or use them?
Right, so the thing that acts like your account is your Bitcoin wallet. That's the software or hardware you use to send and receive.
Okay.
But here's the interesting part. The Bitcoin aren't actually in the wallet like files on your hard drive.
They're not. So where are they?
Remember the blockchain,
Hmm.
that public ledger of all transactions. Think of it like a huge shared spreadsheet, or maybe, like CoinMarketCap suggests, a giant chain of lockers.
Okay, lockers.
Your wallet holds the digital keys to your specific lockers on that chain. Those keys let you access and control your Bitcoin recorded on the blockchain.
Ah, okay, the keys. That makes more sense. And there are different kinds of these keys, these wallets.
Exactly. You've got desktop wallets, software on your computer, then hot wallets, usually mobile or desktop wallets connected to the internet.
Convenient, but maybe less secure.
Potentially, yeah, because they're online. Then you have hardware wallets, often called cold wallets. These are usually physical devices like USB drives. Trezor, Ledger Nano are common examples.
And those are considered safer.
Generally, yes, because they keep your private keys offline, away from potential online threats. Mobile wallets are apps on your phone, very convenient. And paper wallets were an early thing, but They're mostly seen as outdated and less secure now.
Right. So the big question then, why does Bitcoin have value? You hear people say it's just a digital code, nothing's backing it.
Yeah, that argument comes up a lot. But the sources, like CoinMarketCap, emphasize that its value comes from two main things: its utility and the trust people put in it.
Okay, unpack that a bit. Utility and trust.
Well, think about regular money, fiat currency like the dollar or euro. The paper itself isn't worth much, right?
Right, it's just paper or cotton.
We accept it because we trust the system. We trust we can exchange it for goods, services, pay taxes. There's a shared belief.
So it's similar for Bitcoin. People believe it's useful.
Kind of, yeah. Bitcoin, the network, offers utility. Sending money quickly, cheaply, often across borders, without needing banks as middlemen. That's useful to people.
And the trust part.
That comes from belief in the technology, the network security, and crucially, its scarcity.
Ah, scarcity, the 21 million limit.
Exactly.
Yeah.
Unlike fiat currencies where governments can print more, Bitcoin has a hard cap coded in. Only 21 million Bitcoin will ever exist. This limited supply, combined with growing demand as more people see its utility and trust it, will that drives the price.
CoinMarketCap also calls it a store of value, like digital gold.
That's a very common comparison. Many people use Bitcoin to hold wealth over time, maybe hedge against inflation. They value how easy it is to send and store compared to, say, physical gold, and they trust the network's security.
And its performance has been notable.
Undeniably.
Yeah.
Since it launched in 2008, 2009, it's been one of the top performing assets, period. Though extremely volatile too, of course.
Which brings us to safety. How safe is Bitcoin? We hear about hacks, stolen coins.
It's really important to distinguish here. The Bitcoin protocol itself, the core code, and cryptography, it's incredibly secure. With current technology, it's considered practically impossible to hack the network itself.
So the network is safe, but the news stories.
The biggest risks are usually at the user level. People falling for scams, phishing attacks trying to steal their private keys, or security breaches at the exchanges or wallet providers where people store their Bitcoin.
Okay, so if an exchange gets hacked, that doesn't mean Bitcoin itself is broken.
Exactly. Think of it like a bank robbery. The robbery is bad, people lose money, but it doesn't mean the dollar itself is suddenly insecure or flawed.
That's a helpful analogy.
And the Bitcoin network isn't static. There are ongoing updates to improve security and efficiency. The core blockchain ledger has, famously, never been successfully hacked.
What about future threats, like quantum computing?
It's something people discuss, yeah. Powerful enough quantum computers could theoretically break current cryptography. But two things. First, that's likely still quite far off. Second, traditional banking systems rely on similar cryptography, so they'd face the same risk. It's not an immediate Bitcoin-specific threat right now.
Okay, so the fundamental tech seems really solid. Let's dig into some design details. Wikipedia has some good stuff here. Units, for instance.
Right. The symbol is euro, the code is usually BTC, sometimes you see XBT, and it's super divisible, down to 100 millionth of a Bitcoin.
100 million.
Yeah, that smallest unit is called a Satoshi, or a SAT. Helps for making small payments. And you'll notice the capitalization thing. Bitcoin, capital B, usually means the network or the tech.
Yeah.
Bitcoin, lowercase b, means the currency unit itself.
Good distinction. And the blockchain, we've mentioned it, but how does it really work?
So it's that public ledger, right?
Yeah.
Distributed, meaning copies are held by many computers worldwide, not just one central server.
Okay.
Each block in the chain contains a batch of recent transactions. And crucially, each new block contains a unique code, a hash, derived from the data in the previous block.
Which links them together.
Exactly, creates a chain. Tampering with an old block would change its hash, which would break the link to the next block, and so on. It makes the history very difficult to alter, and it's all public. You can use a Blockchain Explorer website to view blocks, transactions, addresses.
So how do my transactions get on the blockchain? That involves addresses and mining, right?
Precisely. Your Bitcoin address, where people send you Bitcoin, is derived from your public key. But to spend Bitcoin from that address, you need the corresponding private key.
The secret key only, I should know.
Right. You use your private key to digitally sign a transaction, proving you own the Bitcoin you're trying to send. The network can verify this signature using your public key without ever seeing your private key.
Okay. And once I make a transaction,
It gets broadcast to the network. Miners then pick up batches of pending transactions and bundle them into a new block.
and mining isn't just validating, it's how new Bitcoin are made.
That's right. Miners compete to solve that complex mathematical puzzle we mentioned. It's called proof of work. Basically, they're trying to find a specific number that, when combined with the block's data, produces a hash meeting certain criteria.
Like finding a winning lottery ticket.
Sort of, yeah. The first miner to find it gets to add their block of transactions to the chain. And, as a reward, they get newly created Bitcoin, the block reward. Currently, that's 3.125 per block.
Plus transaction fees.
Plus any fees users included with their transactions in that block, yes. This reward system incentivizes miners to do the work of securing the network.
And this block reward gets smaller over time, the halving.
Exactly. It's programmed to cut in half roughly every 4 years or every 210,000 blocks. This gradual reduction continues until that 21 million Bitcoin limit is reached, estimated around the year 2140.
So the decreasing supply is built right in, reinforces that scarcity point again.
Absolutely. It's a core part of the economic design. And this whole proof-of-work process, linking blocks cryptographically, makes the blockchain incredibly tamper-resistant. Changing history would require redoing all the work for that block and all the ones after it, plus having more computing power than everyone else combined.
Which is practically infeasible.
Yep.
Okay. Wikipedia also maps out Bitcoin's history. It wasn't the first attempt at digital cash.
No, there were earlier tries, eCash, Hashcash, B-Money, BitGold. But they faced various challenges. Then, 2008, Satoshi publishes the white paper. Bitcoin, a peer-to-peer electronic cash system.
The foundational document.
Right. In January 2009, the network goes live. The first block, the Genesis block, is mined. And Satoshi famously embedded a newspaper headline in it. The Times, 03 Jan 2009, Chancellor on brink of second bailout for banks.
Wow, like a statement right from the start.
A little nod to the financial crisis context, yeah. Then came the first actual transaction. Satoshi sent Bitcoin to Hal Finney, an early developer.
And the pizza. Can't forget the pizza.
The legendary 10,000 Bitcoin for 2 pizzas in 2010 really highlights how dramatically the value has changed. Early on, it also found use on places like the Silk Road online marketplace.
Which probably brought some negative attention to, I imagine, and then regulators started looking closer, and that meant Gox hack.
Yeah, around 2013, 2014, you saw the first major regulatory interest from the US, China. The Mt. Gox collapse in 2014 was huge, a major exchange hack, lots of Bitcoin stolen, shook confidence quite a bit back then.
But it survived that.
It did. Development continued. We saw technical upgrades like SegWit in 2017 designed to improve efficiency, and in recent years, much more institutional interest.
Right, big companies buying Bitcoin, PayPal adding support. El Salvador even made it legal tender.
Huge milestones. And then the arrival of Bitcoin ETFs on major U.S. stock exchanges, making it easier for traditional investors to get exposure.
And the Wikipedia source even mentions some future projections or hypotheticals that were circulating, like price targets, potential government actions.
Yes, it captures some of that forward-looking speculation present in the sources, like hypothetical $100,000 price points or talk of U.S. executive orders. But it's crucial for you, the listener, to remember those were examples of the discourse and enthusiasm at the time the sources were written, not crystal ball predictions for today.
Absolutely. A good reminder about the speculative nature surrounding it. Okay, let's shift to the economics and how Bitcoin is actually used, again, drawing from Wikipedia.
It's interesting, Bitcoin's philosophical roots are often linked to Austrian economics ideas about separating money from state control. This definitely appealed to early adopters, particularly those skeptical of banks and governments.
But does it function as money? Medium of exchange, store of value, unit of account?
That's still debated, honestly. It is used for payments, but its price volatility makes it tricky for everyday stuff.
Yeah.
You know, the value could change significantly between buying something and the transaction settling.
So maybe less for coffee, more for other things, like cross-border payments or those early online markets.
Exactly. Cross-border payments can be a use case, potentially faster or cheaper than traditional methods sometimes. And yes, its early use in online black markets is part of its history. El Salvador's adoption is a major real-world test case, though it's faced criticism internationally.
But its role as an investment seems to have grown massively.
Hugely. Many individuals, and now even large corporations, hold Bitcoin as an asset, a store of value. Though it's worth noting, ownership is quite concentrated. A relatively small number of addresses hold a large portion of the total supply.
Which brings us to the bubble question. Is it just a massive speculative bubble?
That's the million-dollar or maybe billion-dollar question.
Yeah.
You've got Nobel laureates like Stiglitz and Krugman who've been very critical, calling it a bubble, limited utility, etc.
But others disagree.
Others point to the fixed supply, the decentralization, the network effects, arguing it's more like digital gold, a hedge against inflation or system instability. Even the Fed chair described it as speculative, like gold, not really a dollar competitor.
Volatility is definitely part of the story.
For sure. Though some argue its volatility has decreased over time relative to other assets, and you have the whole hodl culture, people holding on for the long term, despite the price swings, believing in its future value.
What about comparing it to a Ponzi scheme? That sometimes comes up.
It does. Some economists have raised concerns, but others argue it doesn't fit the definition. A Ponzi relies on paying early investors with money from new investors, usually involving fraud. Bitcoin, detractors might say, is more like a collective delusion, but not necessarily an intentional fraud like a classic Ponzi. A World Bank report back in 2014 also found it didn't seem to be a Ponzi scheme.
Okay, so circling all the way back to our start, can you actually call yourself Lambo 404 just because you own Bitcoin? After digging into all this, what's the realistic take?
Well, based on everything we've looked at, saying you'll definitely get a Lambo just from Bitcoin, that's highly speculative, isn't it?
Yeah, feels like it.
Bitcoin has created incredible wealth for some early adopters or lucky investors, no doubt. But the volatility is immense. The risks are real. Relying on it for that kind of specific, huge gain is probably not wise financial planning.
So the value isn't just about getting rich quick.
No. Its core value proposition seems tied more to its utility as this decentralized payment network, its potential as a scarce store of value, and the growing trust in the tech itself. The Lambo dream is really just focused on the potential high returns, which is only one facet of this whole complex picture.
Right, so let's recap the key things from this deep dive. Bitcoin, decentralized, peer-to-peer, the original crypto.
Its value comes from utility, scarcity, and trust. The network itself is very secure, but users and exchanges face risks.
Operates on the blockchain, this public ledger. New coins from mining, which also secures the network.
It has a fascinating, sometimes controversial history, marked by huge innovation and price swings. And its economic role, still very much debated and evolving.
Definitely had a few aha moments myself, connecting the tech details to the bigger picture of why it matters.
Me too. And it's so important to remember, this space moves incredibly fast. What we understand today might shift tomorrow.
Absolutely. So maybe a final thought for you, the listener. This idea of decentralized trust that Bitcoin pioneered. How else might that concept start changing things, be it just finance in the future? Something to chew on.
Definitely worth thinking about. Keep exploring the discussions and what's developing out there.
Thanks for joining us on this deep dive.